got to tell you, the Japanese yen, just in my familiarity with people in the hedge fund business, there are a lot of people trading the currency. I mean, the currency market is well over $100 billion a day. This is where all the action is. This is where all the big players are. They use leverage. There have been a lot of people hurt in this market this year. And if they had used this simple technique, they wouldn't have been hurt. They would have been on the right side of the market. There are people who have gone out of business with billions of dollars actually selling, which is a trend, into these 9 lows when they should have been buying. Let me show you. This is somewhat inactive back in June. We should probably use a September contract, but it would apply. Same thing because I was there. This closed greater than 4 trading days earlier, but we did a series of 9. What happened? The market turned here. Now, what I like to look at, and this is not in the book, I stress that. This is important. For a setup, if you want to maybe trade these 9s, day 9 should be less than the low. The low, if you're looking for a buy setup, the low on that particular day should be less than the low of day 8, day 7, but more importantly, day 6. And I'll show you why as this thing unfolds, because this is something that what happens, it's still a good low, but what happens, if you're not less than, specifically, the day 9's low is not less than the low of day 6, you have another day down over and over again. It seems to reappear more and more, where the market just finally cleans everybody out. Now, say, for example, this low on 9 had been greater than 6, you would have seen another day down, and then it would have turned, if it was going to turn on a 9. But let's just go through these now. So you got a 9 here. It's a low close. That's another thing, too. When you start looking at charts, after a while, if someone held a chart up over there, provided I could see that far, I pick out the 9s. I can just see them. My mind is just focused right on 9s. I mean, this is my baby, and I can see it anywhere. I can almost feel it. You know, the 9s just appear over and over again. Or someone came to me, a couple weeks ago in Chicago when I spoke to the Chicago Mercantile Exchange, said, here's a 9. I just looked at the chart. I said, there's no 9 there. Yeah, there is. Look. There wasn't. It was off by a tick. You just get a sense for it after a while. Now, one thing I want to stress before we go on, though, too, these are 9 consecutive, old print, consecutive closes less than the trading close, so the close 4 trading days earlier. Not less than or equal to. Don't get caught up in this. Well, this one's equal, so I'm going to count it. Don't use the equals. We'll show you examples where the equals should not be. This is in a setup. But I'm also going to show you an improvement to the sequential countdown where you do use equals. It's not in the book, and it's a real enhancement. And I'll show you example after example. We'll go from one to the other. Where I use equal, and this thing is calling the precise high, but because you're using greater than for the countdown, or less than for the countdown, this is not part of the setup, you're missing trades. But as far as the setup's concerned, you do not use equals. It's got to be less than for a buy setup. It's got to be greater than for a sell setup. But here, going through this 9 was less than 6, so you're all right. The market's moving up. You want to do a training mode? I'll show you one feature of this system. They've set up a training mode, so you can follow this day by day. You can see it unfolding. There's a 9 over there. You got a 200-point move here.
This is the 9 you're talking about, right?
Yeah, just keep going this way. But you got a 9. You got to play here. I mean, this is 9,600 and 9,750. It's 150 points, and $1,250 per point. Well, that's about $1,900. Okay, here's a 2. He's just going to take you right through it. This is a great training session right here, which maybe you might want to look at later, just to get an appreciation for how it's defining it. 1, 2, 3, 4, 5, 6, 7, 8. Cancel it out. Why do we cancel it out? We had 8 consecutive closes greater than the close 4 trading days earlier. I'm going to get a 9. Oh, I'm all excited I'm going to get a 9. What happens? This particular close here is less than the trading close 1, 2, 3, 4. What is happening, and I see this in the market's regenerating.
That's an equal close there.
Is it equal? Okay, it's equal close. What the market's doing, it's regenerating. It's really building power. If it had gone straight up with 9, you're probably going to get a short-term peak, what I call a stutter in the market. The market's going to take its breath and come down. In this particular case, hey, the market said, and I'll tell you, just from my own experience, I've got 2 close friends who use this religiously. One's at one of the major mutual funds in the country. He's been top 5 in performance this year. And as far as timing, he uses exclusively this. He doesn't know all the nuances that you people are going to know, but he obviously has an appreciation for it. The other fellow is one of the major hedge funds. We've seen it time after time where this equal, for example, in this setup, was enough just to cancel it. And you sit there and you'll watch the markets. On the close, the market will play around this point so many times, it'll just gravitate to this level. And it takes on a meaning. There's a real significance there. There's dynamics within the market that I can't express, I can't explain, but they're there. Now, in this particular case, you cancel that 8 setup, cell setup, because you only, with the 8 cell setup, as opposed to 9, you cancel that movement.
We can go back to that. Here's the
Okay, there's 7. You can see that. There's 8. It's greater than 4. Not. Now this close is greater. It's got to be greater because it's the 1 there.
With all this, I'm sure it is because of the scaling that we're having to do.
Yeah. Now up here is your first close greater than the close 4 trading days earlier. There's 2, there's 3, there's 4, there's 5. Gone. Why is it gone? Because this close is less than the close 4 days earlier. The market's moving higher, and it's fooling a lot of people. Everybody's bearish. I mean, Japanese yen, first time post-history, is above $1. No one believes it. You see the pullback, but I'm looking at it and say, hey, you got to do a 9 at least, to the upside. There's a 1.
Sorry. Continuing to go higher.
Okay, 1, 2.
We were down here.
Yeah.
And we continue to move higher. I had it off the chart.
Okay. There's a 1 and 2 down. There's a 1 up, 2, 3, 4. This will just give you appreciation for the setup. Now here, this one here, now it's regenerating again. 2 and a 3. There's 6, there's 7. Oh, there's a 1 up. There. Now we're going to do some business. Hopefully make a low. This is when? What period of time? August.
That's August of this year.
I remember this, in August there was a low. There's a 1, 2, 3, 4, 5, 6, 7, 8, 9. That 9's low was less than those.
Less than the 6.
Less than the 6, the whole set. Similar to the one we had back earlier in the year. And what the market did, it took off. This is when a number of the major hedge funds sold. They got killed in this. There it goes. That's a big one. That's when you went close to new all-time highs. You're moving up there quick. Now, there's the 8 again. Same thing. Market said, no, I'm not ready to top out. I'm going to give you a pullback. I'm going to stutter. That's what it's doing. Prices, you pull back. Now you're going to regenerate again, I think. Well, you're moving sideways now. Hold on. It's going to do it again. Nope. 3, 4, 5. 1 for a buy setup, 2 for a buy setup, 1 for a sell setup, 2 for a sell setup, 1. Back and forth, back and forth. There we go. 4, 5, 6, 1, 2. See, it's just there. 6, 7, 8. Next one. Hope we get a 9. Okay, this 9 is above the 6. That's important. I watched that one at this low. They said, is it going to do a 9 and turn, or is it going to do on the full countdown? And like I said, I'll show you later how we hopefully increase the odds of distinguishing between whether a 9 is going to be a low or whether you're going to go to fulfillment, which is the countdown. But in this particular case, you can see that the 9 was not less than the 6. The 6 is a real key day. I told you before, 7, 8, or 9. 6 is a real key day, like Rick said. What it told me is that you got one more day down. And you got it right there. Right here, day after. And then that's you have to get below 6. You probably would have put sometime in this zone, you would have said, hey, you're at the low. And now, keep going. That's when you had a strong move to the upside. It was virtually uncontested. I mean, the market just took off. And this is where you caught the hedge fund guys short. Now, there's a 9 again. Look at this one. Same thing, the reverse of that. Where we said before the 9 had to be less than the 6, the 9 has to be greater than the 6. It wasn't even greater than 7 and 8, so you knew you were going to make one more thrust up here.
Greater than the highs.
Greater than the high. The 9's high had to be greater than the 6's high. Conversely, at the low, the 9's low had to be less than the 6's low. See, over here it wasn't. 9 was not less than 6. The reverse of that would be high greater than high of 6. High of 9 greater than high of 6. And it wasn't. What happened, you made one more thrust, and you went above the 6, and that's at 104.10 or something like that. And what happened? What did happen? Oh, there. This is somewhat recent. Yeah, now you're moving it. Oh, look what's happening here. You had a 1, 2, 3 for a buy setup, consecutive days, 4. Then you did a 1 up, 1, 2, 3, 4. I'm dwelling on this because unless you get this basic approach to the setup, the whole concept, you're going to have trouble with the countdown.